The charts are lying, and it looks like the majority of people are falling for this trap. The whales are laughing at you and keep accumulating more. Do not be fooled. This is a very urgent video. The truth is here, so let's not waste a second and get straight to the point. Disclaimer. It was just discovered that Bitcoin ETFs saw an impressive $49 million in inflows, marking the 13th consecutive day of gains. This consistent streak of inflows like that is huge, signaling a level of bullish sentiment we haven't witnessed in quite some time. The buzz in the community is palpable, with many describing this phenomenon as bulls are gearing up. But what exactly are they gearing up for? Well, a picture with a chart has started gaining traction on Twitter, showing that we are on the brink of a huge bull run. The image is described with the caption, "It's so obvious, you just need some patience." And yeah, the author of this picture is right. One critical thing we all seem to forget is that just a month ago, we had a Bitcoin halving event. And historically, these events are the catalysts for major bull runs. However, the impact is not immediate. It takes time for the market to settle after the initial news-driven speculation. Such a significant event causes massive excitement and speculation, leading to erratic market behavior as a lot of people become active. This heightened activity can obscure the bullish impact of the halving. Once the market cools down and the frenzy subsides, that's when the true effects of the halving start to manifest. For instance, after the halving in July 2016, Bitcoin's price was relatively stable initially, but surged from around $650 to nearly $20,000 by December 2017. Similarly, following the May 2020 halving, Bitcoin's price hovered around $9,000 for a while, but then skyrocketed to over $60,000 by April 2021. These historical examples show that while the initial aftermath of a halving can seem underwhelming, the real bullish impact often follows after the market stabilizes. But this is where things get strange. We all know that Shiba Inu often mirrors Bitcoin's movements, so this news should be very bullish for Shiba Inu. However, what's actually happening is quite the opposite. Popular cryptocurrency trader and analyst Ali Martinez has published data showing that people have transferred an astonishing amount of Shiba Inu to crypto trading platforms. And we know that this usually means they want to sell. According to the chart shared by the analyst, between May 14th and May 29th, the overall supply of Shiba Inu on cryptocurrency exchanges increased from approximately 144 trillion to more than 147.5 trillion coins. This means that more than 4 trillion Shiba Inu, roughly $103 million worth, was moved to exchanges. Interestingly, May 29th was the day when Shiba Inu's price skyrocketed, surging by 21% within just a few days. However, this spike was followed by a 12% decrease, likely due to the massive sell-off. The price pullback occurred in two drops. The first took Shiba Inu down by 8.8%, with a brief rebound attempt, followed by a second crash that pushed the price down by another 10%. This analysis makes us wonder why people are selling when the market situation seems so bullish. 13 straight days of Bitcoin inflows is so huge, and it looks like the Bitcoin halving event is finally poised to show its impact. Shiba Inu is one of the few cryptocurrencies that should benefit greatly from these developments. So why are people selling now? It kind of makes no sense. Well, here's what some people think actually happened. The recent price spike in Shiba Inu we saw a couple of days ago prompted people to sell. It's a pretty obvious move for many investors since they all want to lock in some profit. When there's a sudden price increase, it's natural for investors to seize the opportunity to cash out and realize their gains. This behavior is typical in the market. When prices go up quickly, many traders sell to ensure they benefit from the rise before any potential drop. So it probably has nothing to do with the bullish news about Bitcoin. Instead, it's just people selling their Shiba Inu to capitalize on the recent price spike. This selling pressure is what led to the subsequent drop in Shiba Inu's price. But this is where things get very interesting. Within the last 24 hours, the trend of Shiba Inu withdrawals from centralized exchanges among whales has picked up momentum. This is a trend specifically seen among whales. Today, the crypto surveillance account LookOnChain highlighted the activity of a prominent Shiba Inu whale. This investor withdrew approximately 58 billion Shiba Inu tokens from Binance. Meanwhile, another whale transferred over 445 billion Shiba Inu tokens from the American exchange Robinhood to a private wallet. Altogether, whales have moved out over 500 billion Shiba Inu tokens from exchanges within the last 24 hours, with a monetary value exceeding $13 million. What's interesting is that their behavior is the opposite of what the majority of people are doing. So now the question arises, who should you trust? The majority of investors, or the Shiba Inu whales? On one side, trusting the majority makes sense, because their collective actions reflect a broad consensus. When many investors decide to sell, it typically indicates a common sentiment or reaction to market conditions. This crowd behavior can often signal a trend that many believe in. On the other side, trusting the whales might be wiser because these large investors often have more information, resources, and experience. Their significant moves can be a sign of strategic decisions based on deeper insights or long-term plans. Whales moving large amounts of Shiba Inu off exchanges could indicate confidence in future price increases, suggesting they are preparing for a potential rise rather than a sell-off. So, who do you trust? The majority, who might be driven by immediate profit, or the whales, who might have a more strategic, long-term perspective? It's a tough call, and it ultimately depends on your investment philosophy and risk tolerance. But this is where it all starts to make sense. It looks like the majority of people are cashing in on their profits from the recent Shiba Inu price spike we saw a couple of days ago. Meanwhile, the whales are buying and accumulating more Shiba Inu, preparing for a broader bullish trend in the market. Remember the very bullish Bitcoin news? Like 13 straight days of millions of dollars in inflows, and the upcoming impact of the Bitcoin halving? It looks like the whales are getting ready for it. While the majority of investors are focused on realizing short-term profits, the whales seem to be playing a more long-term game. They see the bigger picture and are positioning themselves for what they believe will be a significant market shift. This makes sense because whales often have more resources and better information, allowing them to strategize for long-term gains rather than immediate returns. Their actions suggest confidence in a forthcoming bull market, driven by factors like the Bitcoin halving and sustained inflows into Bitcoin ETFs. So, while many investors are taking quick profits, the whales are likely preparing for a much larger move. This difference in perspective, short-term gains versus long-term strategy, highlights the varying approaches within the crypto market and underscores why following the actions of experienced, well-informed investors can sometimes provide a clearer picture of future market trends. But still, don't take it as financial advice, and do your own research. But that is not all. If we take a broader look at Shiba Inu and exchange metrics, we notice a trend over the past few months. Shiba Inu reserves on centralized exchanges have been diminishing. According to CryptoQuant data, there has been a 10-month downtrend in Shiba Inu's exchange supply, suggesting a buildup of scarcity that could lead to price appreciation if demand persists. The exchange supply peaked at 191 trillion Shiba Inu in March 2022 and has since decreased to about 150 trillion. This indicates that the current wave of selling by the majority of holders is likely just a short-term obstacle. As the overall supply of Shiba Inu on exchanges decreases, scarcity increases, which typically leads to higher prices if demand remains strong. This trend supports the idea that the recent selling is a temporary blip, while the long-term outlook remains bullish. The whales accumulating Shiba Inu are likely banking on this scarcity to drive up the value in the future, reinforcing the notion that they see a bigger, more lucrative picture ahead. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.